Hey there, welcome to the closing bell on the 23rd of August for me. And look, we've had this massive rally over the last few weeks. I was saying last week we got a bit of a buy signal on the S&P, but there is something in the background, isn't there, going on? We know that we had this huge volatility recently, which I think was a really big hint about what the big money is doing. And, you know, looking across the board at commodities, what's going on, it's pretty interesting to just note. You know, we've got the US dollar really keeling over pretty dramatically, but also oil's looking pretty bad. Iron ore's getting hammered on the back of the Chinese property worries and possibly US growth as well. We've just had some employment figures get changed. They adjust them every now and again, and they've basically lowered it by about 850,000 in the US. Past data, they've had to adjust it all. So the strength that we've thought we've had is maybe not really there. So there are signs of that US growth faltering. And remember, the reason why we had that volatility recently was because of the convergence between US and Japanese interest rates. So that is still bubbling away in the background. Just because the market's bounced doesn't mean it's all over. So that's a big reason why on Monday I'm having a chat with Woody about all of this, just to give you a good rundown on really what I think's happened. And the hint that we get from it, how should we be viewing the market going forward? What are the key things to keep an eye on? And I'm also going to let you know three key sectors that I think you should be looking at if we do get another wave to the downside, which I think is certainly a possibility after that huge volatility that we saw and the fact that growth really is coming off the boil. Things aren't as perfect as they seem, I don't think, in the background. So I'm going to give you three ETFs and actually tell you that, you know, where you could start buying those. We'll even have a look at the one I recently gave you, Wire, the copper ETF. I did a big presentation on that recently, saying that you could buy that sort of under $12. And we'll have a look at what happened since I did that video. And last week I showed you Retail Group, didn't I, with a 9% grossed up dividend yield. And they've actually taken off to the upside after a good result. So would be interested to hear from you if you actually managed to jump on them. So a bit to get through today, just quickly to give you a bit of an outline of what's going on beneath the surface out there. And hopefully you'll be able to join me on Monday as well for a bit of a chat. All right, so let's jump to the charts. Well, the first thing I wanted to look at was the US dollar, because it's been treading water for a very long time. And it is starting to see some pretty serious selling pressure. So that can often be, you know, a real driver of markets. So this is a really long-term chart of that US dollar index going back to, you know, 2008. And just to give you a sense of, you know, the key sort of levels out there in that US dollar, you can see back in sort of 2017, it was major resistance there for a long time, around 104. And, you know, the last few years, we saw a big spike in that US dollar with rates rising. And of course, we now know that, you know, the US dollar was getting a lot stronger against the yen, and people were borrowing in yen and investing in US stocks. So, you know, the currency moves are really an underlying factor in what was happening in stocks, we now know. So that's why we want to keep an eye on this sort of stuff going forward. And just the last few years, it really has been treading water, that US dollar. And this has just been creating a range around that key level, which is what often happens. And just interesting to note that it really is, despite the you know, bounce back in markets over the last few weeks after the scare with the US dollar strengthening, with the yen strengthening massively against the US dollar. We've now got the US dollar really starting to turn down quite sharply. And, you know, here is the major support of the last couple of years, and it's around 100, right? So, you know, this is just the last few months that it's gone from 104 down to 100 here. That can be part of a hint about what's going on with US growth as well. So that's one thing that can affect commodities as well. US dollar going down, gold probably rallying, possibly could help other commodities. But let's have a look at that oil price to give a sense of, these hints about what's going on with growth. So this is the oil price over the last few years, massive strong rally. It's had a mean reversion event, and I've been waiting and watching. You'll probably remember if you've been watching, I've been sort of saying, look, above $95 on Brent crude, it's going to look pretty good, saying that it's ready to have its next wave higher, but it did need to get above there before I'd start getting interested. And, with growth coming off the boil, rates still very high, I think it is starting to have an effect on demand. And you can see here that it is starting to turn down on the weekly. It's in a weekly downtrend now. So let's just see how it trades. If it does break below 70 bucks, I'm just wary that there could be a bit of a clear out of positions that have been created over this past year around here. So there could just be a bit of a move to the downside, whether that's just a quick move and then, I didn't mean to do that. A quick move and then it quickly recovers. That could be the case. But if Chinese property really crashes, we have a bit of a crisis, something breaks in the US commercial property, who knows? Maybe we do get a bit of a scare, and then that would, I think, be great buying if we saw oil prices really get hammered, because the long-term picture, I think, remains bullish. But just noting that things are softening off here. Also, if we look at iron ore, now, if you've been a regular viewer, you should know that I gave quite a strong warning on iron ore back in, I think, March. And look at what's happened since. I've been making my calculations off the large down wave that we saw from 22 to 23, 2022 to 2023. So, we had this massive move higher in iron ore, as we know. And we're saying, look, if we have had a bit of a long-term shift in the cycle, we're starting to look at this as a new downtrend. So therefore, you're looking at that wave and you're looking at the buy and sell zones of that wave here and here. And you're also looking at the point of control of that wave, the midpoint, which is what prices oscillate around, like a sort of gravitational pull almost. And you're saying, well, if it's trending down, I'm looking at that sell zone of that wave as the area where there's a risk things can turn down from. And to go into a bit more of a technical view on this, it's what's known as an ABC correction to the upside, where you've got A there, you've got B as the next leg down, which doesn't go below the low. We call that X. And then C goes above A, that one there. That's your C leg, A, B, C. And then if it then turns down below A, you're saying that could be the beginning of a major leg, the next leg, in this major downtrend, where we've got these major waves going. And then this being the next major wave here, which is what I was basing everything off when I initially gave that pretty strong call that iron ore was going to head probably below 100. So from that moment, it has, interesting, I think, to say that it sold off quite rapidly after I gave that warning. But it got down, and where did it bounce from? It bounced from that buy zone, rallied back to where? Exactly the point of control, which is what often happens. It revisits that midpoint yet again, confuses everyone. And then we've got the next leg down, which is probably the dangerous one. So now the question is, if we break below here, does the panic start setting in? And we start to see a sell-off that's sharper than people expect. And that is if We've got China really starting to move on the property, that people are really starting to hit the bids, starting to get into that quite scary phase, I guess, where it's forced selling. And, things can go a bit more pear-shaped in China. So am wary of that and looking at all of these markets thinking, is this the hint that things are a bit worse than people realise? So this is sort of the phase now in iron ore that can actually break, and next target being that low down there around $70. So it's not looking that good, I think, in iron ore. And I gave the warning on Fortescue and Rio and BHP back then, and they have moved a long way, haven't they? I gave you that analysis on Fortescue Mining, and this is their long-term chart on the weekly. And I was looking at, again, the false break of the high, double top. That's what you sort of look for as these trends sort of end. You often get those sort of moves. And it was up around $25 when I said watch out, and had a target back to the midpoint of the whole range from the past few years at $20. And here it is. It's really selling off pretty hard. So it's, come back down to the buy zone of that whole correction from years ago. Again, we've got the point of control around $20. So, you might see a bit of a recovery bounce, but you're still looking at this as sort of the end of the cycle and waiting to find out when it's a buy. Look, maybe it has a false break of that low all the way down at $13. I've seen stranger things, and then maybe it'll be time to jump on for the recovery. But right now, I'd be pretty wary that it could have further downside. So this is where, jumping to the US yen and thinking about this big picture stuff, we got that hint, when they raised rates. Here's the US yen sort of tapping the highest level since 1987, pretty much, months ago, and the Bank of Japan stepping in and not wanting the yen to collapse below that. So this is the US yen, which means that chart going up is the US dollar getting stronger, the yen getting weaker. So this is actually showing you the yen collapsing. And this move that we've recently seen in the last few months is the yen getting stronger and the US dollar getting weaker. So this is what ignited all of that selling, the crash in the Nikkei, the huge moves in the NASDAQ, et cetera, et cetera. So this is what we want to understand going forward. And that's why I want to really chat about all of that on Monday. I think it's a big picture thing to think about when you get a big hint like this, that the big players are moving and what they've been actually doing, borrowing in the yen and investing into the Mag 7 stocks over the last year. Maybe all of that rally's a hot air now. So you can see that the US yen is actually selling off. We know the US dollar is selling off. So the US dollar is actually getting weaker still against that yen. And that's the thing that ignited the unwind of the carry trades. There could still be more to come. So, even though the market's rallying and that sort of thing, the really big picture issue is not bouncing as much as you would expect. We know we've seen a huge bounce in stocks, but let's have a look at this on a daily basis so you get a sense of what's going on. And you can see here that since the US dollar got hammered, which is what ignited the huge crash in stocks a few weeks ago, stocks have bounced back massively, and they're back at all-time highs pretty much. But this is where the US yen is. Would you say that's looking like it's bouncing back easily? Not really. Still got a bit of pressure on it, hasn't it? And the thing is, what happens if it really does start to move? Those carry traders, again, may be forced to continue unwinding their exposure to that trade. So the weakness in the US yen is something to note, and thinking about what happens if we do get another big leg down. as a result of all of this, what's going on. You want to be getting ready with your, some powder dry and thinking about what long-term bullish themes you want to get exposure to, because shakeouts are actually an opportunity rather than something you should be sort of freaking out about. So that's really what I want to get across on Monday. So that's sort of where things are, is everything feels like it's all fine. Certainly the short-term trends are up and happy to go with it. But just thinking some of major things in the background, that China property leading to big collapse in iron ore, oil prices looking pretty shaky, data out of the US looking a bit shaky as well. It all just adds up to say, think about all of these issues and think how you're going to play it if we do see things turn back down again. All right, well, I think that's enough for today. Hope you have a great weekend, and hopefully catch you on Monday for our chat. All right, cheers.